By this point, I've showed you most of the system, and I've showed you most of the things we use within the system. We've covered market structure, talking about trends. We've looked at supply and demand. We've looked at trend reversals. We've also looked at liquidity ranges, and imbalances, so efficient and inefficient pricing. So at this point, it's time to talk about the fractal nature of the market. Basically, what I'm saying is the market is fractal, and what that actually means is that the same formations happen on all different time frames, meaning we can get the same kind of trades and use the same systematic approach across the daily time frame, the hourly time frame, the 5-minute time frame, the 1-minute time frame. It does not matter. We see the same things formulating on every single time frame. We just spoke about entry types. I showed you how we can actually use the confirmation entry on the higher time frames and then scale it in and use it on the 1-minute time frame for an actual confirmation entry. The same exact pattern, the trend reversal pattern, used on the 1-minute time frame for a pinpoint entry in the overall higher time frame structure. And that was a good example showing you how that formation happens on any time frame. It will happen on big time frames, it will happen on small time frames. Well, so will trends, so will supply and demand, so will liquidity, so will imbalances. So this is a really flexible system to trade with. You can day trade with it, you can swing trade with it, you can do whatever you want with it. If you use these concepts, because they follow real price, you're always going to be able to use the same concepts, no matter what time frame you're trading. What I'm going to do now is actually show you a few setup examples on different time frames, showing how the market moves and how the market is actually fractal in nature. So without further ado, let's shoot over to the chart. I'm going to first of all show you some examples on the higher time frames, like the 4-hour chart, and then I'm going to show you some super refined trades on the 1-minute time frames and so on, using exactly the same concepts. So first of all, we are here on GBP AUD on the 4-hour time frame, and what we can see is a nice key level retest, which has then formed a bullish move to the upside. So this bullish move has actually broken some previous structure, giving us a nice higher high in the market. If we look at the 4-hour structure here, we have higher high, higher low, higher high. But what we actually have, if we scope it out real quick, is equal low liquidity. Okay, now this equal low liquidity leads into a imbalance, an inefficient price area. So if we mark these on the chart, you can clearly see imbalance, liquidity, but we do have continuing upside structure. So we could expect the market to move to the upside, but first of all, what we would like to see, we would like to see the market come and sweep through this liquidity and refill the imbalance to form efficient pricing. So what we could go ahead and do is plot on a zone. Obviously, it's a very large zone now, and that is where we would then move to the refining process. So I'm just going to move down to the hourly time frame. And here on the hourly time frame, we can now refine this zone down quite a lot to this area here. Now, what actually catches my interest, however, is that we do have two relatively looking equal lows in the market. Okay, so seeing how even the very low time frame liquidity also plays a part, this just shows that fractal nature of the market where the low time frames are as valuable and as valid as the high time frames. So what I'm going to do now is actually scale down even further, just because of the little equal low liquidity we've got there and the wick and the key level. See if there's actually a demand zone that may sit on the key level that may clear through that liquidity. Now, if we actually look here on the lower time frame, we do indeed have a little demand zone here. Now, we could refine further. We can continue to refine, but I think we can roll with this one for now. So shifting it back up to the hourly time frame for now, we can see we have a set out demand zone that we'd like to see price trade into. We have our equal low liquidity, we have an imbalance, and we have an uptrend with the bullish market structure. So we could go ahead and assume the market's going to come and pull through here. We could put a long position on this demand zone. We use the midpoint for this example. Stop loss beneath the low, and then we could actually look for extended targets. Let's say for this example, we'll just target the previous highs. So this is around a 15-hour potential trade. Now, it may take a bit of time to play out. We are on the hourly chart. We are showing the high time frame example first. But should we get a tap into this zone, there we go. We are very, very likely, and as you can see, it did come through to actually get a very nice trade out of this. So this trade uses all of the concepts we've been speaking about so far in the course: the market structure, the imbalances, the liquidity, the supply and demand. And as you can see, liquidity was swept, imbalance was swept, demand zone was tapped, and then the market kept moving with the trend, bringing us a 15-hour trade with a very precise entry, thanks to refined zones and a nice tight stop loss of 17 pips compared to a 250 pip target. So that's an example on the hourly time frame. What I'm going to do now is move down to the super low time frames. We're talking 1 minute or 5 minute, and find a very similar example, because they do occur a lot And I want to show you an example there of the methods in action. So for this trade, we're on Euro USD and we're on the 10-minute time frame. So this is showing a low time frame example where we'll be using the 10-minute, 5-minute, 3-minute, and 1-minute for the refining and the actual execution of the setup. So as you can see, the last one we did was a 4-hour, 1-hour, 30-minute. This one is a 10-minute, 5-minute, 3-minute, 1-minute. Okay, so this is considerably lower, but it follows the exact same structure and the exact same formations in the market. So to begin, we want to find the structure. Obviously, we can see here we've had a bullish break of structure. We have also had more bullish breaks of structure since, showing us that this is a higher high and we are indeed moving in an uptrend. Now, what we can also see then very clearly is an imbalance here, but we can also see an imbalance here, which is important to note. Now, I'm normally going to want to go for, if I'm using buy or sell limits, this is obviously previous video we spoke about entry types. If I'm going for buy or sell limits, so I'm going for a risk entry, I'm normally going to want to use the extreme zone. Okay, if there is an imbalance into a lower zone, this is going to be the zone I'm using. So initially then, structure and supply and demand being the first things we want to really plot on the chart. We have bullish structure, higher high. We have noticeable imbalances, and we also then have a demand zone in the low that we would like to buy from. And if we also look at where price is now, we can see that we have equal low liquidity. So a nice formation of equal lows, indicating that we've probably got retail buying pressure coming into the market. Usually when we see this, we're going to see a pierce through to trade into one of these demand zones and then go considerably lower. Obviously, as mentioned, this could also be a valid demand zone, but I would be looking for confirmation entries from this one and risk entries from the bottom one, because this is obviously a premium price point. If we can get this discounted, we will definitely want to buy, but we also must be aware that there could be a reversal in there, so that's why we'd wait for a confirmation entry. If it occurs, cool, we can execute a trade. If not, we know that we're going for the extreme zone. So there we go. We've got equal low liquidity, imbalances, and inefficiency pointing into a demand zone in an uptrend, right? Same exact things we just saw on GBP AUD on the 4-hour time frame, and this time we're on the 10-minute time frame. So what I would do real quick is go and refine this demand zone. I'd want to go quite low, see what we can get in terms of a refined area. Now for me, obviously the big indecision candle at the bottom here is going to stand out. We haven't come and traded into the midpoint. We haven't really fulfilled this zone too much, except for a little wick tap there. So I'm going to roll with this 3-minute demand zone in this instance. And I would go ahead and put an entry at the top of it because it is such a refined zone. Okay. So for stop losses, we want to clear the low, which obviously is just going to be beneath the demand zone. And then targets, we will want, let's target the highs again. Okay, let's just target these highs. So this is around a 9R position if triggered in and if successful. So obviously in trending trades, you can go for bigger targets. It all depends on the higher time frame stuff and what you have in mind. But for the example, we're just going to roll with the initial target, the high, pretty easy target to go for an example. So there we go. We have a setup using the exact same things, bullish market structure, demand zone down here, imbalances and inefficiency leading into the demand zone, and equal low liquidity now indicating that we are very much likely to get a push down of some form. So if we allow the market to play out over here on the 10-minute time frame, we will indeed see we get a nice precise tap in, and then the market makes a bullish run straight through our target and forms a new higher high. So as you can see, and as just mentioned, you could have considerably extended this target, but for the sake of an example, an 8.9R trade is definitely nothing to be sad about. So there we go. That is showing the fractal nature of the market. Now, this was essentially a 10-minute, 5-minute, 3-minute setup compared to what we just looked at, a 4-hour, 1-hour, and 30-minute setup using the exact same concepts. Now, the reason it works like this is because we are using real price action. We are following order flow. Okay, we are seeing where price is likely to move based on where orders are being accumulated and based on where retail traders are accumulating their orders and so on. We're following the actual flow of orders. We're not following indicators. We're not following trend lines. We're not following silly things drawn on the chart. We're following the actual flow of orders in the market. And that is why we see this exact same thing happen on every single time frame, be it high time frames or low time frames. And that is why everything works out so well. So this was just a little intermission video really to show you that the markets are fractal and the methods we're using can be used on all time frames.